Oh man, has Jerome Powell, the chairman of the Fed, just crashed the stock market for the next 60 to 90 days at least? Fed chairman Jerome Powell has just spoken. He gave the summary of the statement from the FOMC meeting, and the crypto market initially turned positive, but now is closing the day negative here. I was sipping on my tea, minding my own business, when Jerome Powell came out initially with his statement. The statement went well, right? He made his statement. He said interest rates will remain unchanged. Great news. The market was expecting that. That's good. He also said no speeding up of the taper, which is good. He's still going to print another 30 billion in Feb and another 30 billion in March. Good. Market was expecting it. We saw a good rally up in Bitcoin at the time. We saw a rally up here for Bitcoin all the way up to about almost 39, almost touched 39, and then boom, straight back down. Okay, and we continued all the way down now, currently sitting at, well, we're getting a little bounce here, but we just touched 36,763 here to the downside, and I'm going to explain why and what the Fed has said. And again, guys, for all of those people saying, no, I'm following my TA, I don't need any of this macroeconomic stuff. Come on, guys. Anybody who tells you that, they don't know what they're talking about right now, okay, guys? Because the reality is we need to pay attention to bond yields. We need to pay attention to the Fed. We need to pay attention to the wider economy, because that is what's leading the momentum right now. And what has happened is Jerome Powell has basically said that the market, particularly the labor market, is really strong. He said the labor market is really strong. He said inflation is high, very high, and is more than transitory, right? He kept reiterating these points, and this is why the market did not like it. The market was spooked because he was coming out with very hawkish tones. Okay, we said that earlier in the video. We needed Jerome Powell to come with a bit more of a gentle approach, and things were fine with the statement, right? Because the statement came out. He said that we're not changing interest rates, which was great. We're going to carry on tapering for the next 2 months, and then we're going to get rate liftoff, right? So the market's expecting this. It's already priced in that we're going to get a rate liftoff in March. We spoke about that in the video earlier. He also mentioned that the balance sheet shrinkage, which is his way of sucking out money out of the economy, all the money which he's just printed in over the last 2 years, he's not going to start that until after interest rates have come up. And he actually telegraphed that it's at least until April. They'll discuss it in the meeting in April as well. So we know we've got some time there. So the market was pretty chill about it. And that's why we got the run up in the S&P, in NASDAQ, and therefore Bitcoin for that momentary uplift. But I tweeted at the time, guys, hold fire, because we still need to wait for the Q&A. Because half an hour before your statement comes out, the news published the statement that no interest rate hikes. Great. Market started rallying. And then the Q&A starts. And when the Q&A starts, that is where Jerome Powell starts to answer Q&A questions from the audience. And then we start to get an idea of his mindset. And it was clear right now that his mindset is we're in a different lift-off environment, a different expansion environment to previous rate hikes. He kept saying that. He kept saying the labor market is strong. He even said there's plenty of room for rates to increase given the strength of the labor market, okay? And this is naturally going to spook the market, okay? And that's why we're down slightly today here on Bitcoin and the SPY. But more importantly, does this damage our hopes for the longer term, right? Does this now mess us up going into Q1? We're well into January here on Q1, but does this mean we're going to have a bad 2 months heading up now? And I think that's what we want to analyze here. And the reality is, if we look at where we are on Bitcoin, you can see we've had 4 days of green candle here. We're just fighting for today's candle to try keep it green. Jerome Powell, as he continued to speak, really didn't help us here. And it looks like we've got a bit of a doji candle here. We might close negative. We've got another 3 hours left before this candle closes. But the recovery, is underway, right? You can see here we've got a bit of a trend. The question now is this going to be a fake? And are we going to drop down now as people start to digest the news? That's what we now need to see over the next few days, because the reality is we've got a bit of mixed messages, okay? There was more kicking the can down the road to the next meeting, which is in March, I believe March the 16th, the next FOMC meeting, but we do have some clarity on some bits. We know at least we didn't get interest rate hike today. Market expected it, but at least we know that. We know there's not going to be a rush to shrink the size of the balance sheet. That's a good thing. He's mentioned that it's going to happen after the interest rate hikes and will happen in a predictable manner. That's good. The market should digest that well. What the market couldn't digest was the fact that he left himself room to potentially, and he was asked the question directly as well, he left himself maneuvering room to potentially increase interest rates by 50 basis points in March. Okay, because he didn't come out and just say, oh, it'll be 25 basis points, or he just left himself that, that wriggle room. And therefore, the market will continue to be a little bit spooked and potentially see a little bit more red over the next 45 to 50 days heading into the next FOMC meeting. So I think that's going to be the concern now in the market. We just need to wait and let this digest now over the next 24 hours to see how does the market feel about it. Right now, it doesn't feel so great, but it's not decided on its direction yet. It's kind of just playing a bit of tug of war here at the moment between the bulls and the bears. Sitting at 37, so technically a little bit down from where we were before the announcement. We were at 38, which shows that was taken in a negative manner. Flicking down to some of our altcoins, that's naturally going to reflect in the same way. If I show you here Phantom, which we were monitoring earlier, it didn't completely invalidate our pattern. We didn't drop to 194, we didn't drop to 165, so it wasn't a terrible. That's what would have happened if he said we're increasing interest rates today, right? So we didn't get that, which is good. We have to appreciate that. But we also didn't get the positive news to the upside that would have meant we hit our price target here at $3. And so that's why we're getting a bit of sideways action on Bitcoin, SPY, and Phantom. And we just need to see how does that play out now over the next few days. This is going to be the critical piece, because we got to remember that the Fed's job is not to prop up our market. They don't care about stock traders or crypto traders. Their job is to make sure that the underserved population are not suffering from inflation. And Jerome Powell made it clear that people are suffering out there on inflation because the inflation is being felt on the ground level. So it's his job to make sure that they tackle that inflation in a powerful way. And he made that very clear. Okay. And that is why the markets will naturally be spooked. But let's think about things, guys. Let's think about things from a macro perspective. If we're invested in the long run, and if you're watching my channel, you know that's how I place my investments. Couldn't care less about the next 60 days. If I'm buying some Bitcoin now, if I'm buying some Phantom now, if I'm buying some stocks right now, I'm buying it because I believe in those in the long term, and I believe in the wider space over the long term. Right? And we've just come from a crazy, unprecedented pandemic time where the government had to intervene. They had to print a whole bunch of money. Let's say they printed too much, right? They gave too much stimulus. Fine, I can agree with that. Too much, too soon. But what happened was you were propped up, right? So imagine an example of, a tired person. Let's say I'm super tired and somebody comes over and gives me a bunch of Red Bull. Whether they gave me loads of Red Bull or not, I was really tired, I was knackered, and they gave me some Red Bull. And that got me through a certain period. But then what's happened is now we've got a strong economy. So in other words, I've had rest. I'm well rested. I'm fit and healthy, and I'm ready to go. But now the market is crying that I'm not getting given that Red Bull again. You see what I mean? It becomes almost like an addiction. So it's really important to understand that from a macro perspective, you have Fed Chairman Jerome Powell, who is not kamikaze. He's not coming out here trying to break the stock market. At the same time, he's not trying to, beat around the bush and protect us as well. Okay, he's doing it in a clear way. He's telegraphed everything. When we spoke about the taperings here on this channel, he made that super clear as well. So the market can't act surprised. They made it clear in their economic projections. They'll be at, 3 rate hikes this year. That was in the projections. That's been priced in by the market. We've seen that over the last few weeks. And, now he's made it further clear that liftoff will happen probably in March, market expects. And then after that, he'll start to shrink his balance sheet. Nothing wrong with that, very clear. And the reality is rates are still going to be super low. These are super low rates, guys. Even if you increase it by 0.25 or 0.5, these are super low rates. The economy is healthy and people should be looking at the positive side as opposed to the negative. So now attentions are going to move across to earnings, company earnings, particularly of stocks, high growth stocks like your Teslas, etc., will have an impact on how Bitcoin does, okay? So those are going to be our next catalyst now. I suspect the market will look tentatively towards those because if earnings come through as good, then that's fantastic. Then we can start to feel confident and risk might start turning back on again, okay? But remember, there can be a double-edged sword with some of the earnings as well, because it's not just about Q4 earnings, which are being reported, but the market will also be looking at the projections for Q1 2022, and that's going to be what's going to be on the forefront of the mind, okay? We saw that with Netflix earlier on, but Microsoft came in really well yesterday. That helped Bitcoin rally a little bit as well. So we just need this whole risk-on mindset to continue to propagate further. Let's finally head back over into the Bitcoin chart and remind ourselves of where we're at here. Let's head over to the 4-hourly now. Bring out the EMA ribbon just to give you guys an example of where we at. So once the meeting started, we managed to rally up to the upside, and we're now within our EMA ribbon. But as you can see, when the bad news started coming in, when Jerome Powell couldn't shut up and kept talking, we got sent back to the downside. So we're trying to flip our EMA ribbon. If we could have got to 40 and closed the candles, we would have been bullish on our 4-hourly EMA ribbon here. On the daily, we're still super far off, guys, as expected. We've had a massive move to the downside. We need to get above 40 and start closing in the 41, 42, 43 range to really start penetrating our EMA ribbon and trying to reverse out of this pattern. You look at this volume area here. This is the level we need to get back. Where we dump down here, we need to recover that level before we can start worrying about price points higher. So a lot of work to do here on Bitcoin. But the question really you need to be asking yourself, is this the time to be buying the dip? Is this the time to be, are we going to head? Is there more room to the downside from here or more room to the upside? I think that's the question people need to ask themselves. They need to ask themselves, do we see ourselves being in a sustained recession on the stock side and therefore bear market on the crypto side? Or do we think there's enough, green shoots, positive sentiment, good earnings, good growth from companies, and, really seeing the end side of COVID and emerging on the other side? Do we see that as being the narrative that's going to unfold over the next few months? There you go, guys. Hope you guys enjoyed that summary of what happened with the Fed Chairman Jerome Powell and whether he's going to crash this market. At the moment, it wasn't fantastic. It started off well. As he kept talking, it started to go back down. Let the dust settle. Let's see what happens over the next 24 hours. No doubt I'll bring you an update tomorrow. It's late here now in London, but I'll give you an update tomorrow to see where is the market heading and how is it feeling once it's had a night to digest the fact that rates remain unchanged. We were not caught, left field with a crazy rate hike and a quick shrinkage of the balance sheet. Tapering wasn't suddenly stopped. I mean, this is one of the better scenarios that we could have had. The only thing that would have been better than this from Fed Chairman Jerome Powell is for him to come out and say 25 basis points in March and be really gentle and really dovish. The dovish part was never really going to happen if you know Jerome Powell, but the bit around 25 basis points could have been announced, and he was leaning towards the fact that he could have a 0.5% interest rate hike in March. So that could be spooking markets. We'll have to see how that gets priced in over the next few days. As always, guys, thanks for watching this video. If you appreciate this type of content and the fact that right now I'm having to bring you macroeconomic content just to make sure you have all the data you need to make your decisions, guys. If anybody telling you right now, there's a lot of YouTubers out there right now who are just out of their depth, massive followings, but they're out of their depth. Why? Because they're TA artists, right? They plot some charts on TA, but they're unable to give you the context of what is going on right now. And those people, please be careful if you're following them for your long-term investments. Your long-term investments, when they don't understand the macroeconomy, they don't understand, the nuances around what moves stocks and therefore crypto, what's the correlation between them. Please be careful who you're watching and who you're following, because right now we still have a bunch of YouTubers out there who are just saying, oh, look, we have a head and shoulders pattern and this is the way it's going to go. Click below to get your leverage account and trade this on 100x. That's not how things work. We need to educate ourselves, understand what moves this market, and only then can we make the kind of long-term decisions that will build us sustainable wealth in stocks and crypto. So as always, guys, smash up the like button and subscribe if you appreciate this type of content. If you want to see more videos like this, then comment below what type of videos you want to see. Let me know. Give me that feedback. Head into the Discord. Pinned comment will be the link to our free public Discord server. You can chat to me in there. Give me your video ideas. Vote on what type of coins you want covering. What type? Do you want more TA in this moment? Do you want less TA? Do you need more support around psychology or some of the macroeconomic trends? Let me know. As always, thanks for watching, guys.